Good morning, guys. We're going to try to start on time as much as we can. Thank you. We've got a double banger day today. Hometown Heroes program. We've got Tracy Van Landschoot from Mortgage One going to share that. And I know that's why you all are here, to learn about how to get more money and how to get more leads and customers, right? So we're going to do that. And then our own Joanna is going to lead into our Bear Printing Alliance that we have to give you some really great tools to spread the news about the new mortgage program that's out there. If you have any questions, put them in chat. Or raise your hand and we can kind of go through there. So, or save your questions till the end. I think, would that be better for you? Save the questions to the end?
And whatever.
Out. We'll make it a free for all.
We don't care.
Okay. And for those of you who aren't here, we hope you enjoy all of this because we're going to record it and put it and post it up for you. So without further ado, Tracy Van Landschoot with Mortgage One.
Good morning, everybody. Can you see me okay?
Yeah.
Okay. Hi. Most of you I know, those who have you I don't. Thanks for coming. Appreciate it. Do you have the presentation? So when we were in Tallahassee in January, JJ and I were part of the group that actually got to see the Florida realtors push this through the Florida legislature. So it was a really, really cool thing to be able to be a part of it and watch it, and now to see it come to life in our own Cape Coral, Florida by our governor. It's unbelievably, like, I just can't even tell you, I get goosebumps thinking about it, especially when it is giving back to our hometown heroes. And so we're going to go into a little bit about hometown heroes, what it's about, and how to get the money. We'll go into the guidelines. I know people are going to have questions about that. And that's what we're here to talk to you about. So hometown heroes, we'll start with that.
And you can let them know I also put the attachments in the chat.
Okay. And the attachments for the employment and who is eligible, she put in the chat. And then there's also attachments on income guidelines and sales price guidelines, because there are limits to these. Okay. 1, 2. For those overachievers that attended. All right. Perfect. All right. So real heroes don't wear capes. Real superheroes wear uniforms and badges and stethoscopes. Real superheroes are members of our military, law enforcement, and first responders. So basically, this is a great program that's going to help everybody that was on the front line, taking care of COVID people as well. So this is good for them. Let's see. Oops. The Hometown Heroes program is just making housing affordable. So it helps them get into the house with down payment and closing costs. So most people, I will say, I guess, frontline workers, your firefighters, your nurses, they make a good living. They just don't have a substantial amount to put down and pay closing costs. So this program is going to help them. So we're going to go over that. 50 plus occupations are eligible to participate in this. This opens the door for a lot of people for financing. Yep. Now, it is a first-time home buyer program. Okay. So for the first-time home buyer defined, what is that? If they don't claim their mobile home as real property, it's on a rented land, then okay, they're a first-time home buyer. Now, if they do not own the home, here's a little thing here. If they do not own the home that they currently live in, let's just say that an ex-husband inherits a property in North Carolina, but he hasn't lived in it in the primary, then we will allow them to do, they'll allow that as a first-time home buyer. First-time home buyer is somebody who's not purchased a property within the past 3 years. I've already had people reach out to me saying, I want to refinance and do it through this program. It's not available. It is a purchase-only program. Okay. Now, also, first-time home buyer, anytime it's a primary residence, they have to occupy the property within 60 days of closing. That is on all the documents that they sign at closing. Okay. So that's standard. Now, here's a great thing. They open this up to not only our first responders, but veterans. Yep. Didn't know that, did you? So veterans whose discharge status, anything other than dishonorable.
That really opens it.
Yeah.
Even veterans that left before they completed
Yeah.
their tours or whatever.
Yep, this is straight from them. Active duty personnel from the military. they're eligible. Now, even this, so automatically on a VA loan, that the surviving spouse does get the eligibility, but they're saying that they're going to be eligible for this program as well. So, yeah. So here's where the down payment assistance is available in Florida, right here. Just right here, just all here, right here. Yes, all of Florida. Okay, they are allowed to get up to 5% down payment assistance up to $25,000. That's the maximum, right? That is the maximum. Okay, they've allotted $100 million for this program. So it's down payment could be 3.5 FHA, could be 3 conventional, could be 0 VA, and they have their closing costs paid. Okay. Here's the programs we're doing: FHA, VA, USDA. We come across, I mean, it's a rare, but we do come across them, and conventional. Okay. So those are the people that qualify, or the programs that qualify. Now, so 5% of the total loan amount capped at $25,000. Any excess funds can be used to reduce the loan to value. Now, and on this program, they will allow you to pay down the principal up to $1,000. So if somebody's got an allotment of 20 grand and they only needed 19, we'll take that extra $1,000 and pay it down on their principal, but it's only $1,000 allowed to do the principal reduction. Otherwise, you got to reduce the loan amount. You got to change it. Okay. Does that make sense? Okay.
All right, so not more than
Right.
$1,000.
And this is a 30-year term, second silent mortgage. It's at 0% interest and there's no monthly payments. Okay. So it is a second. It is a second mortgage. And it is repayable. When you refinance, and we're going to go into that, if you refinance, you sell, or you move out of the property and rent it, then you have to pay that back. Now, and there's a good reason behind that, because that $100 million that as it goes down, when this is paid back, they're going to replenish that. So they're replenishing it as we go. And I know that because I was there and I heard it. That's how I know that. I was in Tallahassee and I heard it firsthand. We were the first ones to sign up for this program. We couldn't wait. So FYI, they do have to pay it back. See, if they transfer the deed, anytime you sell it, anything.
If they stay in their house for 30 years.
Doesn't matter. And in 30 years, it could change.
Yeah.
But if they refinance, they got to pay it back. So if somebody gets on, honestly, rates are still good. And I hope that you're telling your clients that. So if you've got a 5.5% interest rate and you lock in on this property and you keep it for 20 years, I mean, in 20 years, they might come back in 5 or 10 and change it and say, guess what? We're not doing this anymore. So everybody's forgiven for what they had borrowed. You just don't know. But for now, if they do sell or refinance or, rent the property out, they have to pay it back, but it just replenishes it so that we keep going and rolling with it, if that makes sense, right? Okay. Must have this. This is a must have on this program. They have to have a copy of a license from a federal, state, or local agency. Okay. It's a must have. And then there's a form that they have to sign too, that they're certifying that they are in fact who they are, and they're certified that they're just, again, government. All right. And then the questions that we have are, I didn't post all of the guidelines because really you guys don't need to know that. You just need to know that we have this money. This is how much you can get. Go talk to your lender. But I'm going to give you a little lowdown on those. So normally when you do a down payment assistance program, they want to know what your household income is, unless we're doing a Florida, let's say bond or grant money, right? So the only person's income, you see the income limitations. We only use the income from the borrower, and tax returns aren't always required, just sometimes they're required depending on their job. So if they're a W-2 firefighter, we got a verification of employment to use their overtime to qualify. And their income limit is, let's see, say this, his is 150. Okay. We want to use just him to qualify for that mortgage. We can't, even if the wife's a nurse. Does that make sense? So we only use the income for the person that's on the mortgage qualifying. We don't have to use the whole household income. Bonus.
Can this be mixed with those other forms you were talking about, grants, SHIP funds, all that? Can that be combined?
No.
No. Okay, so this would be their only
This is
way for
only-
down payment. Okay.
This is it.
And it goes
Hometown.
Standard VA, standard conventional.
Yep.
Standard FHA.
Yep. And there are some GSE programs that are for Fannie Mae and Freddie Mac has some GSE programs that are kind of low down payment assistance. We don't see those a lot in our area. They're more for the,
Qualified.
right. Those programs do qualify on this as well. I just didn't put it out there because a lot of people don't know that. And that would be something that we would say, oh, they're low income for Fannie Mae or Freddie Mac. And guess what? We can still get them that 5%. Okay. So the standard eligibility documentation for that, that was the biggest question I had. Debt to income ratios, 45%. Okay. Now they have to have a 640 score to qualify. Now we can go to a 50% debt to income ratio, just like on a regular program, which is great. But with that, they have to have a 680 score. Okay. So there are score qualifications as well. You can have a cosigner. Yeah, you can have a cosigner on this program. Sure. They do. Okay. So I have a customer who's currently a nurse apprentice. They have to have the license. They have to have a license if you guys saw the, let me go back here.
Oh, wait, hold on, you're still in the chat.
That was it. Go back one more.
I got it.
That's it. They have to have a license. They have to be a
But
license.
they got their license 5 minutes.
5 minutes.
Okay.
Get your license 5 minutes later. Call me.
Get your loan, yeah, okay.
Call me.
And it says federal, so it doesn't have to be a Florida license, just to confirm that they
It
can.
could be a
have
federal.
Correct. It has to be from a federal,
Local.
state, or local agency only. Okay. So federal, state. So yeah, people moving here, they all, yeah,
Could be from any other state as well.
yeah.
Okay, the other question. If there are two people
Entire
who are
cops
not
required
married, it's
coming
qualified.
in.
Yes. Yes, absolutely. Yes,
So one borrower would.
Correct.
would qualify.
correct.
For them. Doesn't have to be-
Absolutely.
Two people can't get 10%, because people are gonna ask them.
Correct.
Of
No,
course. Oh, we've got 50
Correct.
grand.
correct. Yep. It's a one per file. That's one per file. If they have a license, they need to be employed on that job too. If you guys look at the eligible occupations, not only do they sign this, but they're also going to sign a form that says that they currently are who they say they are. These are for the frontline workers. If they're not doing this right now, I don't know if they qualify or not. I'd have to ask that question. That's a good question. I don't know. But if they're a frontline worker and they're licensed and this is what they do for a living, yes. If they work at Red Lobster and they have their nursing degree and they don't like it anymore, I don't know if that'll fly, but I can ask because that's not their
They
job.
still have the license, Don.
Correct. If they still have the
Then they're
license,
probably not gonna qualify for the loan.
that's a good question. Well, they might get a cosigner.
Could get good tips.
I have a cosigner for someone at Red Lobster that has a license and this one works at
Whatever.
Saks.
That's for the creative mortgage lenders.
Yeah,
So you
that's,
gotta figure this
those are
out.
the loans we get.
Yeah, that's realtors on there.
Those are the loans we get. Yeah, those are the, you know what? We'll get them done. If they can be done, we'll do them. I can't wait for rates to come out. We don't have that yet. We have not gotten the rates yet. The biggest thing I want to see is what the rates are going to look like. Because when we do the mortgages for the bond program, they basically, they dictate what the rates are to us. We don't have
Usually
choice.
higher.
Sometimes they're a little higher, sometimes they're a little lower. We've had them where we've put people into the bond program because the rates were like 0.75% lower, even if they didn't need it.
Makes it hard.
Right, right.
But they don't have to qualify for the additional monies in their ratios. even though it's going to be a lien, a second mortgage.
Correct, correct. There, it's a silent second. There's no payment on it. They do not have to
No
qualify.
qualification on that.
Mm-mm. Nope.
As if it's like, yeah, as
It's
if
just-
grandma said, "Give me money."
Right, but the thing you want to make sure they know, you always want to educate your buyers, and you want to make sure your buyers know that this is, it's refundable. You have to pay it back. You do have to pay it. As of now, you do have to pay it back, which is fine though. I mean, they're getting into a house. They don't have that as a, I mean,
They
I
don't-
think it's great. I
they're
really
just
think it's
trying to
great.
save the money.
I mean-
apologize 'cause I was late. How
No,
long
it's-
do they have to pay it back
They don't. They only have to pay it back
when they sell?
when they sell, refinance, or if they move out of the property and they rent it out, they've got to pay
Okay,
it
but
back.
there's no statute, like if they live in the house 25 years,
Yep.
they still have to pay it back.
Right. And so what I was saying about that was that in 20 years, they might do away with the program and say, guess what? Don't have to pay it back. It's good. So we don't know. But for now, it's, you have to,
Except
they
30
replenish
years.
it.
Just wanted to make sure.
The
Yeah.
Program, let's say these people that buy the house and live there 33 years, just for example, is that one then forgiven?
It said that-
As of now, no.
Oh,
You said 30 years.
you said 30.
It's
years.
30-year amortization. 30-year amortization.
So the 25, let's say they borrow the 25. Do they have to pay back only the 25 or is there anything on that? No.
Though it's 0% interest. It's just whatever they were given at closing, they give back closing. That's it. It's pretty simple. Yep. And again, 640 score, like it mimics the bond program that we have now.
Right.
Not the ship money, it's the bond program we have now and the grant program we have now too. So depending how, when rates come out June 1st, it still might make sense for us to put them in the grant program to where they don't have to, I mean, it's just, this is a great
Well, that's your
program.
job,
It's
Rachel.
available. We've had some nurses, all of a sudden now, guess what? They don't have down payment. They're so excited.
Makes
I'm
a
like,
big
call me
difference.
June 1st. I have to remind them to call me June 1st so I can tell you what the rate's gonna be,
There's
because
so
I
much
can't wait.
covered. Athletic trainer? That's
Yeah.
Wild.
50+ occupations are covered in this.
Question.
She likes that.
I have a nurse who owns a home that she rents to her family. Her father lives in it. She's owned it for a very long time. She has not purchased a house in the last 3 years. Can she qualify?
Mm-mm.
She can't because
No,
she has a rental property.
because she lived in it and she still owns it.
Okay.
I mean, I can pose the question and double check it,
Mhm.
but according to these programs, it's specifically for first-time home buyers who have not owned a home in the last 3 years. But they say there's circumstances where if they inherited the property, that's a different situation. So she wouldn't qualify, but I could still ask.
Okay.
I always would, send me an email for that question and I will, it's a no until you ask.
Great, thanks.
I have a question. This is just, oh, right. How would this work in a duplex with a VA loan where the person's gonna live on one side of the entitled?
It says
All
duplexes
purpose.
qualify. There's 2-family, 3-family, 4-family. Now, keep in mind, when you're going in a VA into a VA product, you're also putting yourself into, I'm sorry, a VA product with more than one unit. You're putting yourself into a situation that now those veterans have to come up, they have to have 6 months reserves. So you have to make sure that they qualify with those 6 months reserves.
Correct.
And that can be a gift and that can be anything, but this program is specifically for down payment closing costs.
Okay,
So I don't, those funds won't be used.
right.
But yeah, they can buy a duplex.
Because this is like something like an enhanced product.
Mhm.
that was-
It says, I've got all the guidelines here. Is co-signer's income considered in program income? Co-signer's income considered in program income as the Florida first considered program. We already know that. Purchase only, refinances are not eligible. We already know that. Let's see. Yeah, all of them here. But they can do, I saw in here, we can do 2, 3, and 4 units. Here it is.
So long as
Property
it's
type.
one.
Attached dwelling, of course, we know that. 2 to 4 unit properties, borrower must occupy one side. Property must be at least 5 years old.
Oh, that's
So new
interesting.
construction.
Very interesting.
Yeah. Why?
That's weird.
Where's the 800 number for?
I don't know
governor?
why. I was
I don't know.
curious. I don't know.
Good question.
Maybe the new ones are too expensive or, I don't know.
Yeah.
It's very strange.
2 to 4 unit properties.
Ah,
Yeah.
That's what it was.
Borrowers must occupy one, we know. Property must be at least 5 years old.
That's an excellent thing to know. So that you don't-
That is an excellent
What do
thing
you
to
mean,
know,
new
isn't
ones?
it?
You go buy a Christopher Allen home and then you find out, oh, shoes.
Yeah, no,
Is
no.
that also for single family? They can't buy new. That's like VA. No,
That
you
just
can buy
says for
new
2 to 4 units. It does not say for
a
new.
single
for
family, they can
right,
go and buy new so long as
Correct.
it exists.
correct.
Or is it gonna be like?
Well,
VA,
single family
FHA, You
residents.
could do the pre-construction. VA has
Yeah.
to exist.
I'll tell you.
Completed.
Yeah, that's for 2 to 4 unit properties only, it says.
Oh, that's very strange.
Isn't it? Well, it's the same thing as with the down payment assistance program. And I'll give you an example for the SHIP funds that they have.
Yeah, it has to be consistent.
But if you're purchasing a property under the SHIP funds for the Lee County with Debbie Curran, I don't know if you guys all know her, right? If the borrower is purchasing the property and it's tenant occupied, the tenant has to be out before they'll allow us to close on that property. You can't, it can't be tenant, the tenant has to be out. They can't be in that property. So there's little glitches on, you have to know all
So
the
they don't
little
give you like
niches.
a time period like FH and VA, they give you like. I don't know how long.
They just have to move in within 60 days.
Yes.
So the
correct.
tenant's got to be gone.
Has to
That
be-
does bring up a question. I know you're talking about USA, USDA, FHA, VA. Does it apply to all the products like their rehab loans? Or is this going to be just straight FHA, VA loans? If you don't know, could you find out? That might make a difference.
It
to
should
some
apply
of
to
our-
all of them.
I would think.
It should apply to all of them. Because this is they've listed FHA. I mean, they did not break out, no rehabs. So,
Right.
yeah.
You mentioned that, especially since they're putting them in over.
what is FHA preferred, FHA advantage? Limit sheet.
It's on this sheet.
The Florida Housing Finance FHFA. preferred. Oh, those are for high cost areas. Has anybody ever heard of a high cost area? Naples. So those are for the high cost areas. If you go to even on the county loan limits for Lee County and Collier County, you'll see a difference in our FHA loan limits alone. So that's what that is. Those are for high cost areas. Anything else? Cape Coral, yeah, now.
Some parts of it, yeah.
Yeah,
Absolutely.
Yeah.
Now I think all parts of it, I can't believe. it.
right.
So this crappy old pool on World Country Club for like $550. I'm like, really?
Remember Lee Hassano? She just ran, I ran into her. She's like, look at this property. It's across the street on the other side of this neighborhood from Walmart in Cape Coral on a canal for 2.5 million. The house is beautiful, but it's 45 minutes out and it's
Still across from Walmart. no
Right,
matter what you do.
right.
Guest parking.
And it's some real estate office. I don't think I've ever heard of Universal something.
Who knows? People are wacky these days. Who the hell knows?
So what's the latest in mortgages that we need to know out in the field?
The latest on mortgages?
Yeah, what do we need to know?
What have we been teaching on recently, Mike? Mortgage Mike. Let's hear from Mortgage Mike.
Here's your money.
Condos. We've been teaching on condos.
Oh, I'm allergic to condoms.
The addendums, those addendums, there's a lot of management companies that do not want to fill out those addendums, right?
Or, you know,
Let me know if they don't. I have a way of getting that done.
Yeah, yeah. But aside from that, it's my.
Oh.
I think the appraisal situation is kind of better now. Because it
I
used to
think
be
so.
like,
We haven't really had much of an issue with the
Yeah,
appraisals.
lately, no, but a while ago, it's like a draft, it was absolutely drastic.
I should say we did have one, it was Mary Dryer's buyer and when you run it through collateral underwriting, it comes back and gives you a risk score. That's Fannie
Right.
Mae and 1 to 5. One's being like the lowest, and 5 being like you really stretched it. And we had one come back at a 1 and well, yeah, I mean, because mortgage one, we fought them like tooth and nail. I mean, I think to the point where we don't go to corporate much for anything. And when we do, it's
Yeah.
like, anyway, I think they just tell us what we wanted to hear to get us out of their face.
That's ironed out.
So we got another appraisal and it came in and it was still like a 1.5 risk and we got that deal done.
How about with mortgage rates going up, how is that going to affect prices? What do you think?
Well, I mean, when I got in the business in 1989, they were 12 and 13%.
Oh, I know.
So I have a
It
chart.
went down to 17%. I ran out for a condo.
Yeah. I have a chart. I have a chart, a history chart, and it kind of outlines that the average interest rate really since 1970 has been 7%. So we're still below.
Yeah.
What it is
Prices
that
can be very different. But then,
the rates are not going to go up. We maybe see 6 1/4, but but they can't, they're going to come back down.
15 or 17 or whatever.
We're in the middle of that huge Marina Villa project. And I know that there's people like, we want to lock in. And I'm like, I just don't think it's a good idea because I don't want to lock people in. And then a year from now, they're like, well, I'm going to go to somebody else because it's a lower rate. We handle things. We have our own things that we have to handle that
You don't know, so you think it might be a blip, but you don't know. It depends on so many things.
I think they're going to come back down a little bit.
I like that statistic that she said over a period of over 25 years, the average mortgage rate is 7%. That's a really good calming factor because I think that's what we're seeing is a lot of buyers just getting
I'll send you
cold.
the chart.
They're just getting cold feet and they're getting
So cool.
nervous. So
I have
use it
so
in,
much stuff, you guys.
that'd be great. Yeah. I mean, use that kind of stuff in your buyer consultation, whether it's in person or Zoom or whatever. The idea right now is just calming the consumer down. TV, every day it's all something horrible going on and we're heading down into a recession and blah, 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 because they want to scare and it sells papers and it makes their news counts go up. But the reality is Florida is still the 3rd largest state in the United States. We've got a very stable economy. We're open for business, which a lot of states aren't. Our COVID numbers are down. Nothing's happening bad here in Florida. So people are coming.
My main people who've been coming here recently from this state of Colorado.
Colorado,
Colorado,
California, interesting
personally,
states.
I've been getting those phone calls.
Yeah, so you might see some political shifting in Florida, which would be interesting as
Not
we
the
go.
people I talk to.
Are-
I don't hear. Yeah. I'm telling you, I don't do politics. I live in a bubble, but they just go off on, I'm like, oh, okay. Yeah. Well, I can get you that mortgage. That's all I do.
I mean, that's it. We represent the realtor party. What is it going to be good for you as the homeowner? And that's why this Hometown Heroes is just so exciting
Oh, yeah.
because really we got up there. We had over 1,000 realtors up in Tallahassee really promoting and pushing this program, pushing the business sales tax reduction. We're out there really trying to keep our customers happy and keep Florida open for business. We were the one, that's one reason we all have been making money over the last few years is the governor declared us an essential working thing. And that is because of your RPEC dollar. I mean, that is massive.
Oh,
We were
yeah.
able to stay open and do business where we had realtor friends in other states that were, they were going to the food,
Yep.
they were going to the food banks.
Michigan,
digging into their
where
reserves,
My
yeah.
company, we
They
have
were
like 32
closed.
offices in Michigan and they were like, yeah,
Yeah.
it was terrible. It was
I
terrible.
don't think people who do it was moving.
And now that's why everybody wants to move here.
Yes.
There's still people, everybody wants to move here.
So thank you very much.
You're welcome.
And to call Mortgage Mike, call Tracy Van Shoot with Mortgage One. They're always good. So
Yes,
thank
if
you.
you guys need anything, give us a call. That's what we're here for, is to help you guys out.
Anybody